Hello everyone, thanks for taking the time out to attend this webinar. There are three areas I want to cover in today's session. Firstly, I want to look at the growing demand for business advisory services. We'll then have a look at three key opportunities for accountants and their clients. And finally, we'll show you how to identify opportunities and provide proactive advice using GearShift forecasting software. So to start, let's have a look at the revenue forecast for the accountancy sector for 2015 through to 2019. The red line that you see in this chart is a forecast for accounting, tax and legal work over the next 5 years. And the green line is a forecast for consultancy services over the same period. Now for the accounting, tax and legal work, you can see that the forecast is fairly flat over that period. And this is really due to the fact that in this space, it's going to become increasingly commoditised and price sensitive. Now there will be some winners and losers in this space, and some firms will do extremely well in it, but it's not going to be the easiest place to work in over the next 5 years. By contrast, if you look at the consultancy services line, the forecast is for significant growth over the period. And this covers a wide range of services, including wealth management and exit planning for baby boomers, through to improving business profitability, cash flow and systems. The key point to note is that the growth areas are in services that the accountants are professionally trained to deliver and represent a great opportunity to grow your practice. I now want to look at three key opportunities for accountants and their clients. The first area I want to look at is cash flow management. Cash flow management is an issue for a wide range of businesses in the UK and in a variety of different sectors. And the UK government is trying to help, but in reality there is a late payment culture in the UK, and this continues to cause problems for small to medium sized businesses. We also have an issue with businesses potentially running out of cash as the economy improves. As companies start to pick up more work, they can run into difficulties if they don't have sufficient working capital to support the business growth. This is classic overtrading, and again an area that accountants are extremely well placed to help and advise their clients on. The second area is in business planning. The rate of self-employed and new start businesses in the UK is at a 40-year high, and these companies need help. They need help getting set up, they need help understanding the finances of the business, and they need help in sourcing funding. But it's not just business planning for new start businesses. You also have a high number of baby boomers in the UK who are likely to be looking to sell their business over the next 5 to 10 years. And that opens up a whole range of services, such as wealth management, succession planning, exit planning, and tax planning. So there's a wide range of opportunities to help clients. The third area is the opportunity to provide virtual finance director services. Now this is a space that's becoming increasingly easy to get involved in, particularly with the introduction of cloud accounting software. With internet-based accounting software, you can now have a real-time window into your client's finances, so you no longer have to wait until the year end to understand how your client's business is performing. This provides a real opportunity for accountants to work through the year with their clients on areas such as budgeting, management accounting and profit improvement. The key here is that you can gain a more detailed understanding of your client's business and be in a position to operate in an advisory capacity. This also means that your service is more tailored to the needs of the client and is less exposed to direct price competition. Now, these three opportunities that I've highlighted here are just examples. There's a wide range of additional services that accountants can provide. The one thing to note, however, with all these opportunities is that they involve some element of looking to the future. It's not just enough to look at the historical position of a company. With the integration capabilities of cloud-based accounting software and forecasting software, you've got an ability to look at the business both historically and going forward, and importantly to help influence the future decision making of your clients. That opens up the door to a whole raft of service opportunities that we've just been discussing. We're now going to look at GearShift and show you how it can help provide proactive advice to your clients. Okay, so we're now in the GearShift forecasting software. So to begin with, we'll have a look at the dashboard. The dashboard section provides KPI and high-level indicators for the company, and what we've got displayed here is 6 KPIs on this dashboard. On the top left-hand side, you can see we've got something around sales. So this is looking at the sales from 2014 against the forecast for sales in 2015. And you can see here that the blue line, which is a 2015 forecast, is certainly a lot higher than what we've seen in last year's performance, and it's also fairly flat. So if I put my finance director's hat on at this point, I'd probably be querying the forecast for 2015. The forecast sales are significantly higher, and the pattern is totally different from what we've seen versus last year. So I might have some questions round about that. In the middle, we have a 6 months cash flow projection. Now the system works off a red, amber and green indication system. Green means that you have cash in the bank. Amber means that you're in overdraft but within your limit. And red basically means that you're beyond your overdraft facility. So in this particular business, they've got cash for the month ahead, and then it's going to start to hit some significant problems for the second month, and to be honest, it's bumping against its facility thereafter. So certainly something to look at there from an advisory point of view. The next area on the right hand side looks at the forecast payment terms. So it will measure on average how quickly you're getting the money in from your customers versus how quickly you're paying it out to your suppliers. And you can see in this particular case, we've got a negative 12 days. So in other words, we're getting the money in later from our customers than we're paying out for our suppliers. So this will obviously cause problems for the cash position of this company, and maybe a contributing factor to the short-term cash flow problems that we saw in the previous graph. So I'll be looking to work with the client to see how we can help, possibly by providing credit control and working capital management services. Another aspect of the dashboard is that it lets you look at your actual performance against your forecast. You can select any period you like and compare it against what you've planned through your forecast. So you can see here, I'm looking at the month of May and what we've achieved this month against our forecast. On the left hand side, we can review our operating profit margin against our forecast and see the associated variances. In the centre, we've got a split down of the sales analysis, and you can see here that the forecast was for a significant amount of software licenses, which are shown here in blue, but in actual fact in the month we achieved very little sales in that area. So that's a key problem that has contributed to the deficit on the sales target. On the right hand side, we can easily see the forecast variances in the working capital areas such as debtors and creditors. Again, useful information in understanding where the business has generated its cash from. The next area we're going to look at is creating a forecast. So how do you create a forecast in GearShift? Well, the system comes with a number of predefined categories which you can see down the left hand side. Underneath these categories, you can expand and create the bespoke categories that are relevant to your client's business. So in this particular case, we've got a software company and it's got sales of training and software licenses. And it's the same with the costs. You can just open up the cost category and create the costs that are appropriate to your client. Behind each category, you can enter the forecast values, and you also get the opportunity to bespoke the cash flow profile for each category. So to illustrate this, I'm now going to open up the training category. To enter values within here, you can enter values manually, which is what this has been set to, but you also have the option to enter recurring values. Typically, you would use a recurring item entry for standing orders, direct debits, etc. You also have an option to use a percentage of another category. So if, for example, you have variable costs in the business which relate to sales, you can set up the relationship between costs to sales, and the system will populate the values for you automatically. We also have an option to import forecasts from Excel spreadsheets. We have an Excel template that you can use, and it's pre-configured, so you can just upload it into the GearShift system. I'll come to that again shortly. The other information I can set against the category is the payment terms. You can define when you would typically bill revenue, if you pay by payment instalments, and how many days credit applies to this category. This is very powerful information for cash flow purposes, as it allows you to bespoke the payment terms for each category, so when you come to do your cash flow forecasts, you've got a level of rigour that's very difficult to achieve and replicate through Excel spreadsheets. So that's how you enter the values as far as forecasts are concerned, and also the payment terms for any given category. The only other area to look at within the profit forecast is payroll costs. If I look at direct staff costs, for example, you will notice that I'm prompted for the payroll date and national insurance and pension details, which the system will now use for your cash flow. I mentioned earlier that you can import forecasts from an Excel spreadsheet, so I'll just show you how to do that. If you click on Import Forecast, you're prompted to download an Excel template. This template has been created within the system. What you'll see is that all the categories that are set up in your system now appear down the left-hand side. It also pulls over all values, so if you've entered any values to the forecast already, it'll pull that out for you. The point to note is that this Excel spreadsheet is pre-configured so that it works seamlessly when it comes to integrating with GearShift, and it's protected so that you can't overwrite any of the categories. You can, however, change the values. So if you want to update any of the values directly, then you can do that. If you want to link the spreadsheet to any other Excel spreadsheets you've got running, then you can do that as well. So basically, you can create a composite Excel spreadsheet that uses your bespoke spreadsheets with GearShift. So set it up, save it, and then you can just upload it into GearShift in seconds. So going back to the system itself, you can see that you're prompted to enter next. And then you're prompted to upload your Excel file. So browse, go to your desktop, select the file and press import. And that brings the forecast in. It's simple and straightforward and an easy way of working with Excel spreadsheets. The next area to look at is the balance sheet. Again, similar to the profit forecast, you have standard categories, and within these categories you can create your own bespoke descriptions. As you can see, I've created one called Office Equipment, where you can add any additions, depreciation, payment terms, and opening balances that relate to office equipment. You've got all the information you need to drive the balance sheet entries here. The system also, as you would expect, maintains the debtors and the creditors balances. So you can see here, for example, you've got a trade debtors total running. And this is based on your opening debtors, the sales you've made in the forecast, less the cash payment profiles that you've set up. And the system calculates your trade debtors balance for you automatically. Now let's have a look at the cash flow. The system provides reporting in two formats. There's a graphical view, which is popular for users who prefer not to see masses of data, and this can be viewed in monthly, weekly, or even daily time periods. A number of users still prefer a more spreadsheet-based layout, and we cater for that as well. Here you can see what looks like a standard cash flow layout with opening cash and money in and money out. However, there's one key difference. This report has drill down capability. So if I click on any of the figures in this report, the system will give me a full breakdown of what is making up the figures. Now this is a key point, as frequently there is confusion between what is reported in profit and how this relates to the cash flow reports. In GearShift, you can easily see how sales and costs are handled in the cash flow via the drill down facility. The next part of the system we're going to look at is the what if modelling tool. Now, this is one of the most powerful parts of the system. So if you've got a cash flow problem, you're going to want to find out what you can do about it. You could go to a bank and see if you could get money from there, but usually there's a number of things you can do to improve the cash flow position without even going near a bank. The what if tool in GearShift was designed to give you a very quick and easy way to identify the key levers that you can pull to improve the cash flow position. You can see that what I have here is a chart with blue bars, and these represent the cash flow position at the moment. The dotted line you see is your overdraft limit, and you can see that certainly from halfway through the year, the cash flow position starts to look very tight against the overdraft. So I might want to look and see what I can do to improve this situation. I might want, for example, to see the impact of me bringing on a new salesperson. How would that work? What would the impact be on my cash flow? So to calculate this, all you do is click on Add a Condition. Now what I'm going to do is increase the value of my payroll cost by £2,000 a month, which is the cost of my new salesman. I select Operating Staff Costs and tell the system to increase my staff costs by £2,000 per month from the 1st of January. I'm going to see what that would do to my cash position. As you can see, not unsurprisingly, our cash position deteriorates. The blue bar is where you are at the moment. The amber bar is if you brought on that member of staff. And as you can see, as the year goes on, the cash flow position just deteriorates because you've got an increase in your overhead, but no corresponding increase in your revenue. At the bottom, it gives you the table view of the data, so it shows you the current cash position against the what-if position, and you can see that the cash flow position is deteriorating as we go. But I want to add another condition onto this. So I've recruited my salesman, but I'd expect to see an increase in my sales. But realistically, by the time I get him or her trained up, we'll not see an improvement in sales until the second half of the year. So I'm going to increase my sales. I could select any particular category, but I'm going to increase all of my sales in this particular example by 20%. But I also know that I'm not really expecting any sales increase until the second half of the year. Press apply and you can see that for the year the cash flow position is deteriorating because obviously we've got the cost of the salesperson but without any improvement in the first half of the year. However, we can see an improvement in the second half of the year, which reflects the forecast increase in sales after the salesperson is trained and up and running. As you can see, it's very quick and simple to model business decisions and see the cash flow impact on the company. The beauty of this is also that you can be looking at the data in real time and working through solutions with your client who could be hundreds of miles away. So the next area I'm going to cover is actuals. The system allows you to enter or import actual information from cash flow into GearShift. This means that you've then got the historical data from cash flow and the forecast information in GearShift held in one single system. This allows you then to run a number of reports which blend together historical data and future information, which is really powerful. When you first set the system up, you'll be prompted to select cash flow as your accounting system. When you select cash flow, you'll also be given the option to use the chart of accounts as the basis of the forecast categories that you set up in GearShift. This enables the system to pre-populate the categories in GearShift with all the chart of accounts information. There will be a mapping set up which takes your information from cash flow and determines the rules basically for where that's going to be mapped in the GearShift system. So down the left hand side you can see I've got the details from cash flow, and on the right hand side I've got the corresponding mapping in GearShift. You can change the mapping very easily by using the drop down boxes to select where you want the account information to be mapped to in the forecast. And that just allows you to determine the mapping rules and amend them quickly and easily if you need to. Having set this up, you can at any time bring the data across from cash flow, and GearShift knows where that data should be mapped to and enters the corresponding values in the forecast. It's really simple to bring the data over from cash flow. You can see here that I'm set up to integrate with a cash flow account, and I've got a button Sync with Cash Flow. If you click on that button, you'll then be prompted to select which period it is that you want to import the balances from. Now I'm going to select May 2015 and bring the data over from my cash flow account. It takes under 2 minutes to complete the synchronization, and you can now see that the data has come over successfully. It's very quick and very straightforward. The next area I want to give you a flavour of is reporting. Typically, you have different types of reporting needs. So for illustration, I'm going to look at reporting for the bank, where possible you have to pull together a full P&L balance sheet and cash flow forecasts. We have an option for producing a full forecast pack in either summary or detailed level. You can choose how you want the information displayed and what financial year it relates to, etc. You just click Export, and what you'll do is run the report, produce it in Excel, and you can see here that what we have is a 2-year P&L, balance sheet and cash flow report. It's very quick and simple to do using the forecasting software. The next thing we'll look at is a report that blends actual information with forecast information. So I'm going to look at a full year forecast report. You can see that I've got an option to select when I want to use my actual information from, and in this case I will select from January through to May 2015, and I'll use the forecast information from June through to December 2015. So I'm just going to run a 1-year forecast, which is a mixture of actual and forecast information. So if I click Export, it'll open up in Excel, and what you can see in the area shaded green is the actual figures from your accounting system, and the area shaded blue is the forecast information created in GearShift. So basically you've blended actual and forecast information to give a full year forecast. No need for disparate systems or spreadsheets. It can all just be run through GearShift. Another useful report is the performance report, and this looks at the actual performance against forecast. When you select this report, the system will display the month and year-to-date actuals against forecast. And again, you can export these to Excel if required. This type of report is in a typical management accounting layout, and it enables you to focus more time on analysing business performance rather than compiling data. The last area I just want to touch on is in the settings. So a number of standard settings in the system. There's VAT settings, organisation settings, payment settings, etc. But the one I want to draw your attention to is forecast settings. The system can support multiple forecasts, and as you can see here, I've created 3 different forecasts. The one that is ticked is the one that is active, in other words, the one that I'm using. You can choose to work in a different forecast and set that to be in the active forecast that you're working on. So this is really useful, as you can now create multiple versions of the forecast. So for example, you might want to create a best case, worst case and most likely case forecast, or alternatively a first quarter, second quarter or third quarter forecast. To demonstrate how easy it is to create a new forecast, there's an option to create new forecasts, which is what I'll do, and you're prompted to put in a forecast name. So I'm just going to call this version 3. I'm prompted to select, do I want to copy an existing forecast? Now this can be very useful, particularly if you want to save time and don't want to recreate your forecast from scratch. I've selected yes. You'll then be asked which forecast you want to copy, so I'm going to copy my main forecast for 2015 to 2017. The system will prompt me for when I want the forecast start date to be set. So in this particular case, I'm going to do it halfway through the year. So I'm just going to make this for July. The system will then just take a few seconds to create a copy of your forecast. So to finish, let me summarise the key points from today's session. Firstly, in the next 5 years, there will be some terrific opportunities for accountants to provide business advisory services in areas such as wealth management, exit planning and finance director services. With the availability and increased adoption of cloud financial software such as GearShift, it's now easy to work closely with your clients and to provide proactive business advice. And lastly, we looked at the various reporting, KPI and modelling features of GearShift, which can help clients make quick, informed decisions about their business going forward. This helps clients manage their businesses more effectively and provides a great platform for providing advisory services that clients need when they need them. So that's everything I want to cover in this session. If you'd like a free trial of GearShift forecasting software, please select the free trial option on our website, www.gearshiftplanning.com. Thanks very much for your time.